Hey y'all, hey friends, glad you're here. Finally, I'm here all in one piece. All right, if you do not know me, I am Brianna Beers, Bree to my friends, and I own the recently rebranded Bree Beers and Associates. We used to be Lippa Beers and Associates up until June of this year, so a couple months ago. So my firm helps small businesses and individuals with tax prep and tax planning. Tax planning is our jam. We're super stoked to eventually get to it for this year because that's where we get to strategize with you guys, our clients, and we get to help you not only minimize your annual tax burden, but hopefully help you decide where you can take that extra cash and invest it back into your business and back into yourselves. And exciting things coming that way. So just keep a lookout. Just keep an ear out on us. So you might be watching this in a variety of places. If you are not watching this in our awesome Facebook community who's helping me make sure I'm working things, that's called Money, Tax, and Finance for Small Business, then head over there. If you're a business owner, you should definitely be in that group. It's an awesome community, and we post daily tips. We have these daily Q&A and update sessions live, so you guys can come over there to that group and ask your questions live. And we have weekly trainings on Mondays. Brings me to that new training schedule for those of you new or even not. So Mondays in our Money, Tax, and Finance Facebook group, we have our weekly trainings on Mondays at 9 a.m. Mountain Standard Time. That's our normal live training sessions. And that's where we're going to talk about all the topics that you guys ask most often. And then on Thursdays, right now at 2 o'clock Mountain Standard Time, we go over any updates from the previous week and we open it up to live questions. If you ever can't make it live, or you want to find a past live that you know had answers to some of your questions, they are in the video section of that Money, Tax, and Finance group. Or you can always do what I ask and head over to our YouTube channel. If you go over there, subscribe, but I like it because it seems so much easier to search through old videos than Facebook. That's just my preference. So, all right, let's get going. All right. So it's been a really quiet week. 2 weeks ago, those executive orders were announced by President Trump, and we were hoping that Congress would pass one of their bills that we kept hearing about. They've since recessed, and we thought last week they were going to reconvene for like an emergency meeting to try and get this bill passed. Instead, they've decided to reconvene to figure out the post office, I guess, with all the stuff that's going on with the post office. So pretty confident at this point that we're not going to get any new guidance on anything that we're waiting for until after they reconvene in Labor Day. So that's disappointing, I know. But let's back it up. Last week, we talked about these executive orders. And the big issue that I had a lot of discussions with people after the live was on that $400 of unemployment. There were a few other things in there, but that's what I really got a lot of feedback on. Really, you guys, I don't want to spend a whole lot of time on this because there's no guarantee that these are actually going to get approved. If there's ever going to be, anything that pushes these through. And honestly, if they're ever going to actually be enacted, okay, they were an executive order, which still needs, powers of higher being to actually get enacted. And I think we'll have something passed by Congress before we get anything that solidifies these executive orders. That's just my opinion. I'm not a politician. I don't really know, but this is just based on what I'm keeping up on. That said, we talked about him last week. We're hoping, something happens. But like I said, what we're really going to probably end up getting more information on and sooner is something passed by Congress. There are, I think, six bills that make up the HEALS or the HEALS Act. There's HEALS, there's HEROES, there's so many things. What else am I reading about right now? The Restart Act. So many things going on right now. But right now, all of them are just ideas. All right, they're all just, that's what a bill is. A bill is an idea that has been presented to either the House or the Senate, and then they have to pass whichever house they're presented to first. After they pass that house, then they go to the other house. That's where we get problems because right now the House has the bills they want to pass, and the Senate has bills they want to pass, and y'all know, one's red, one's blue, right? So what they want is different. And so when they go to the other side, they get destroyed, and that's why we are where we are. I'm both sides to blame. This is not political, this is tax. But how can tax not be political, right? So anyway, so we need something to pass. And so I feel like when Congress reconvenes the day after Labor Day, I think we will get something that passes that week. Okay, I think we will get something, hopefully, that passes that week. And most of the questions I've received this week that I usually throw into this Q&A and updates section, they've all been about PPP and or the executive orders or the extended unemployment. And the bottom line is that, you guys, we've learned absolutely nothing new on PPP since the last Treasury interim ruling, which was in June, I think June 26th. So not much going on, which on one front has been nice because I've been able to work on other things. But I know that as soon as it passes, it's gonna hit the fan. Right? So if you do have questions, you guys, even if they're ones I've answered, I'm happy to, circle back around and talk to them, answer them, talk about them. So if there's anything on PPP, EIDL, I'm happy to say this is, to have a review of what those laws stood at as of the last Treasury interim ruling, and then what I think might change in these bills. That said, I want to chat a little bit. I've done a lot of research, kept up with these bills a lot on both sides, and based on my, kind of theory and talking about my theories, talking about kind of reading into some other tax professionals' ideas, I kind of can tell you what I think might pass, what I think has a good chance of passing. So we'll talk about that real quick. And in all that, Jen, I will come back and talk to you about safe harbor rules as well. We'll talk about this all at once. So yeah, we'll go ahead and hit on these PPP things right now. All right. So the parts of the bills that I am looking forward to seeing pass, meaning I think they have a chance of passing, a good chance of passing. All right, blanket forgiveness for loans under $150,000. All right, blanket forgiveness on PPP loans under $150,000. I've said this in every training I talk about when we talk about this blanket forgiveness. Even if they pass the blanket forgiveness, you guys, it's not just going to be like, oh, yep, now you can go spend it on whatever you want. Okay. What I believe is going to happen is if they pass, and I really do think they're going to pass it, you guys, this blanket forgiveness has the big banks behind it, which, again, trying not to be too political, but that's where the power lies, okay? And those big banks are pushing for this blanket forgiveness because 85% of all PPP loans that were issued were for amounts under $150,000. With this blanket forgiveness, if they were to pass it, then the banks get out of doing all the paperwork for those loans. Okay, see where I'm going here? Okay, so it's not only better for us as the borrowers, it's better for the banks, which is why I think it'll pass because it has the banks behind it. That, circling back around to, that does not mean that that's going to give you free will or free reign to just go spend your money if you haven't already on anything, okay? What I believe that means is instead of having the application forgiveness, even the easy, but was still not necessarily super easy, you as the borrower will just have to certify things. Like it might just be a list of things that says, yes, I spent, these funds on this areas that I'm allowed to, payroll, business rent, business mortgage, interest, business utilities, and business interest expense. Yes, I spent it only on those 5 things. Yes, I spent 60% of it on payroll. Yes, I agree that I did not cut my FTEs, okay? All these things, right? Yes, I spent it within the 24 weeks or the 8 weeks, whatever you opted for, okay? So you're gonna have to say, yes, I did all these things right. You're just not gonna have to prove it right this second. You're still gonna have to certify you did things right. You just don't have to prove it right this second. That means you keep all your documents in case the SBA comes back in 2 or 3 or 4 years. But for now, you don't have to submit all the payroll reports. You won't have to submit all the application paperwork, all that stuff. Okay. Again, this is just my educated guess on what that blanket forgiveness will look like. We'll be able to talk about it more once something finally passes. All right. We've also heard a second round of PPP loans. Okay, that is big. I have so many clients right now asking about the second round of PPP loans. That is also where the Restart Act comes in because there's also a proposal for a new Restart Act loan. Will it replace the PPP? Will it be in addition to PPP? I don't know. What will it look like? I don't know. I do believe that these PPP loans or whatever new loan is included is going to have some sort of requirement of proof of decreased revenue. I just have a feeling that that's going to happen. But again, my educated guesses today. That's what today should be called. Bree's educated guesses. We've also heard, and this one I think there's a less chance of passing, but I don't think it's impossible, is an increase. So EIDL advances. Okay, guys, back up. So no more, not PPP, EIDL. And we're talking about the advance portion. So back it up way back to when they passed it, and we were told that we all were under the impression each business was going to get 10 grand. Fast forward, we ended up only getting 1,000 per employee. Now there's talk that they might say, okay, we are going to give 10,000 advance to everyone who applied. I don't know why there hasn't been a lot of pushback in this area that I've seen. So I don't know that there's enough pushback or pull to get this to pass, and that will justify all the crazy work behind it. Then again, I don't think anybody's thinking about all the work that has to go on the back end for any of this. So could be wrong. Right. And then we've also all the things that were actually in the executive orders, an extension of PUA, so unemployment for the self-employed, and those additional funds for everybody, extension of student loan relief, extension of the eviction and foreclosure moratoriums. So those three things are all similar to the executive orders, so I think there's a really good chance of those getting passed, because then they don't have to do anything with the executive orders. They can kind of cancel those and then just include it in this congressional act. Okay. Can you talk about the safe harbor rules? I will talk about that after my next section that I want to talk about. And then you say, what are the biggest things you think will be the biggest problems for businesses in both loans? Elaborate, Jen. So what are the biggest things you think will be the biggest problems for businesses in both loans? So do you mean, so for clients that already have their loans and we're at the point where we're talking about forgiveness for PPP, are you talking about, and you say for both loans, so PPP and EIDL? I don't think there's going to be a lot of issues with EIDL. And let me circle back around to that in a second. All right. The last thing I want to talk about, because I've gotten questions from y'all, not you guys necessarily on this call, but a lot of people in the group, and I've been getting emails about, is how you pay yourself with the PPP funds if you are a Schedule C. So meaning you're self-employed, not an S corp. So I'm getting questions. Do I pay it all in a lump sum? Do I pay it now? Do I pay it at the end of my 24 weeks? Do I pay it evenly over the 24 weeks? Do I, all those questions? That's the number one question I'm getting right now. And I'm going to tell you, although banks are going to screw this next sentence up, all right, I'm going to tell you that it does not matter how you pay yourself unless you're also trying to take unemployment. And I'll circle back around to that. So a lot of this though, so a few things that come into play. So first, this is under the assumption that you got the right amount. You got the right loan amount, okay? And we know that there are so many business owners out there, the self-employed, who got overfunded, some who got underfunded. So as long as you got funded the right amount or potentially less, as long as you didn't get overfunded, okay, on your loan, then you just need to ensure that then you need to ensure the amount that you pay yourself doesn't exceed the 2.5 months. I'm sorry, that's if you got overfunded, you could only pay yourself the amount that's equivalent to 2.5 months of pay based on line 31 of your 2019 Schedule C. Okay, so let's say, try to think of easy math. Let's say that number is $100,000, nice and even. Okay, I should know these numbers by now. It's just been a while. No, let's say that number is $12,000, because 12,000 divided by 12 is 1,000. And that's easy money, easy math. Accountants aren't necessarily good at math, you guys. Side note, we use calculators. So your Schedule C, line 31, which is your net income from your business in 2019, was $12,000. You divide that by 12, gets you 1,000. That's per month. You multiply that by 2.5 months, because that's what the loan amount was for. So you end up with $2,500. Okay, so your loan amount was $2,500. They calculated it correctly. That's fantastic. That money is going to be forgiven. Okay, that amount is automatically going to be forgiven. It does not matter if you take it all at once right now. It does not matter if you wait and take it at the end of your 24-week period. It honestly shouldn't matter if you don't take it out of your business at all. Because honestly, a lot of my Schedule C people, if they they need to keep their money in their business, right? So if they pay it to themselves, they just want to reinvest it as an owner contribution. Do I think some banks are going to come back and request distribution proof and payment proof because they don't know what they're doing? Yeah. So do I have a right answer? No. But I've been working with my clients and the clients who have come in who already have their PPP, right? And they had it earlier. I've been telling them, take the 24-week period. Okay, listen, because what I'm about to tell you guys is worth a couple $100. Okay. So if I lost you, come back to me. Take the 24-week period. If you are self-employed, you don't have employees, right? You just need to get the money paid to yourself forgiven. Okay, so you're going to take that full 24 weeks, okay? Because if you don't, you can't get it all forgiven. And then if you were on unemployment, okay, earlier this year, or maybe you're going to be on unemployment now, hope that extra money kicks in, Congress passes something, whatever, okay? You're not going to take your PPP money until the end of your 24 weeks, okay? Assuming you don't need it for bills, okay? So if you are still making a little bit of money, just not as much, if you have money in reserves, whatever the reason, if you can hold off taking your PPP money to pay yourself until the end of your 24-week period, I advise you do that. Because what that does, and I said this way back at the beginning, all right? So, but if you're new to me, because what this does, if you wait to use it until the last 10 weeks, 2.5 months of your 24-week period, you can be on unemployment up until that point and take those unemployment benefits. Are there some states that have certain things that are written in here that will keep you from doing that? Yes, but there's very few states that are doing that right now. That said, after Congress passes something, which tells us what our new unemployment is, how long it's going to last, what our new PPP is, I will do a whole training on how to maximize your unemployment and your PPP. I did one when this all first came out, but since it's now August and that original PUA has expired, it's going to change. Okay, but I will do a whole new training on that, I promise. As long as you guys are interested, of course. So circles back around to how do you pay yourself, lump sum, equal payments. It all comes back to it doesn't matter. Unless you're trying to do PPP and unemployment, it doesn't matter. Oh, last note just says if you are or did take both, if you were on unemployment, you do need to make sure that you're either not double dipping. All right, you didn't take PPP money out the same week you tried to claim unemployment, or you reported that PPP amount on your unemployment claim, which in turn would have decreased the amount of unemployment you received. Okay, but again, we're kind of in this limbo land where you're probably like, I don't really care what you're saying because PUA is expired and we don't know what's coming to be active as of August 1st. So all kind of talking in hypotheticals. All right, let's circle back around to questions. So what are the biggest things you think will be the biggest problems for businesses in both loans? Yes, existing PPP loans. Okay, so my take on so for my clients out there, or your guys' clients out there, anyone out there, taxpayers, business owners, if you had a PPP, right, or you have one still. So you have a PPP loan and I have so many that are just so concerned that the banks they're trying to prove non-forgiveness. Okay, they're trying to prove that the funds were spent wrong. They're trying to no. Okay, banks are on your side. Okay, I don't say that very much. Yes, banks do not want your 2-year or 5-year 1% loans for these minuscule amounts. And so for the exact same reasons that they are pushing for this blanket forgiveness, they are also, I firmly believe, going to be very, what is the opposite of, they're not going to scrutinize these applications, the forgiveness applications, okay? They're going to get your application, they're going to make sure nothing looks fishy, and I think they're going to just approve things, okay? Because they do not want your $400 loan for 5 years at 1% interest, okay? They don't want that. If they can forgive all of your loan amounts, they are going to want to forgive all of your loan amounts, okay? So banks are on our side in this aspect. They want to forgive your loans, and most of it comes back on you guys anyway. Like when you read the forgiveness applications, even as they are right now, the banks aren't taking on anything right here, like any of the risk. Okay. It's all you as the borrower are certifying. Yes, you paid the loan. Yes, you used the funds correctly. Yes, you used them in the right amount and in the right way. Okay. And that brings us to Safe Harbor. So anytime we talk about Safe Harbor, because you guys, Safe Harbor doesn't just apply to PPP loans. We have Safe Harbor rules in the tax world in various other areas. Okay. But in this instance, you guys, the Safe Harbor rule says if you didn't satisfy this FTE, this full-time equivalent, and this hour requirement, which I'll circle back around to, these safe harbors keep you protected, okay? So let's back that up. And one of the things you're going to have to certify to, even under blanket forgiveness, okay, is that you kept your full-time equivalents. If you have no employees, this is not relevant to you. Let me start there. If you have no employees, other than yourself if you're an S Corp, or no employees if you're a Schedule C or a partnership, FTE, hours, and safe harbor doesn't matter to you. But for those of us that have employees, okay, so let's say, so there is a look back period and then your covered period. So your covered period is your loan time, okay? So that's the 8 weeks or 24 weeks that we keep talking about, okay? So your look back period is what they're comparing it to, okay? So for most people, that was either 2019, okay, or it was January of 20 through like maybe February 15th of 2020, can't remember. But basically, before COVID, what did your staffing look like? How many employees did you have? So if you had one employee who worked 40 plus hours a week, that's one FTE, one full-time equivalent. If you had one person who worked 20 hours a week, that's a 0.5 FTE, or a half of an employee. All right. If you had someone who worked 10 hours a week, that's 0.25. Okay. A quarter of an FTE. Okay. So if you had 4 employees who each worked 10 hours, that's total is 1 FTE. So do we make sure we understand what an FTE is? That's a full-time equivalent. So if you have one person that works 40 hours a week, okay, that's 1. You have one person that works 20 hours a week, that's half. And then let's say you have 2 employees a week that work 10 hours each, so that's another half. So you have 2 employee full-time equivalents. Even though you have 4 employees, you don't have to keep 4 employees. You have to keep 2 full-time employees. And that can be any makeup, okay? So it can be 2 employees that work 40 hours a week. It could be a number of employees that work a lot less. Okay, but that's your way of saying, yeah, I had 4 employees, right? In that example I just gave you. But I don't still have to have 4 employees during my covered period. I have to have FTEs, full-time equivalents. So in that example I just gave, sure, I had 4 employees, but the FTEs were only 2, okay? That is, and I could probably do a whole 30-minute training just on FTEs, honestly, just to kind of get that grasp. So as long as you have the same number of FTEs, full-time equivalents, before and after, you're good. So if you didn't do any laying off and you didn't do any hour cutting, there's nothing to worry about here. Okay, there's nothing to worry about here. The other piece of that is so that's the FTE. And then the other part of that is your pay. Anyone that made under $100,000. So if you have any employees you paid over $100,000, they are exempt from this next person or this next part. But any employees who received less than $100,000 from you in 2019, okay, you cannot have cut their pay by more than 25%. And that includes their hourly rate, okay? So if they were making $10 an hour last year, you have to be paying them at least $7.50 still. Otherwise, you're going to cut into your salary portion of that requirement, okay? And then from there, you guys, there's safe harbor. So if you did cut people down, right? So again, let's go back. If you didn't cut any jobs, you have the same amount of employees working the same amount of time at the same pay, there's nothing for you to worry about, okay? Safe harbor means nothing to you. You don't need it, okay? You check the boxes that say you follow the rules. If you don't pass those tests, then you have to qualify under these safe harbor rules if you want full forgiveness. Otherwise, they can decrease the percentage of your loan that they forgive. Okay, and some things like that, the biggest one, you guys, that I'm seeing is if you offered a job back to somebody, but they didn't take it, that's a safe harbor for you. If you couldn't open your job back up to full capacity because of COVID, that's a safe harbor. That's saying, yeah, you didn't fulfill these FTE and salary maintenance requirements, but here's why, and you fall under safe harbor. All right, are y'all with me? Okay, so Courtney, let me know, Jen, if that answers your question, because I think that's good. So Courtney says, for Schedule C PPP, you said to try and wait the 10 weeks before dispersing the funds to your personal account if possible. If you are also trying to take unemployment. So I said that. So the question is, for Schedule C PPP, you said try and wait the 10 weeks before dispersing the funds to your personal account. So for my Schedule C peeps who have PPP funds, you have this 24-week period to spend your money. 24 weeks to spend your money. Depending on when you got the funds, any time between the middle of April and August 8th, right, you can start spending your PPP money on paying yourself. But if you also wanted or still want to take unemployment, I say take unemployment as long as you can, okay? And then at the last 10 weeks, because you have to spread your PPP payments to yourself, reporting them at least, to 10 weeks. You can't take your full loan amount in 1 week and say, that's my pay. You have to at least spread it out over that 2.5 months or 10 weeks. But so what I'm saying is if you wait and you use the last 10 weeks of your covered period, okay, to pay those PPP loans, that opens you up to take unemployment for all the times before that, okay? And the reason I suggest that is because I don't know how long unemployment's gonna go. When I was making this advice, giving this advice back in June and July and May, I was saying, stay on unemployment now if you can, and take your PPP starting August 1st. Now it sounds like we're going to get some sort of extension of unemployment. I'm pretty confident we are, you guys. And if and when Congress does that, they're going to backdate it to August 1st. I'm confident in that statement. So don't take that PPP. Don't pay yourself for that PPP until you've exhausted your unemployment benefits, unless you're in a state that requires you to report your PPP when you get it. But there are very few states making that requirement. Monday, we have training, 9 p.m. Mountain Standard Time and 9 a.m. And I think we start our business deduction series. I think there's a 3-part series on business deduction. So great one for you guys to come in and join me for. And for my clients, or those of you thinking about becoming a client, need you to listen up real quick in case you do not read our newsletters. You should, really important. But if you don't, remember that S Corps and partnership returns are due September 15th. And if you are a current client of ours, you need to get your documents into our office by tomorrow, August 21st, to guarantee we can get it filed. Can we get it filed? If not, maybe, but we got a lot of stuff in this week. So if you want to guarantee that your S Corp or your partnership return gets completed by the September 15th deadline, get your stuff into the client portal by tomorrow. All right. For our individuals, so that's those of you even with Schedule C businesses, your deadline is October 15th for extensions, meaning if you did not file by the July 15th deadline, but you filed an extension to give you that extra time, you have until October 15th. Again, if you are a returning client of Bree Beers and Associates, make sure you get your documents to us by September 18th. If you are a new client and you want to be a new client, and then you need to get onboarded by September 4th, which is right around the corner. So if you need us, or you are interested in having us prepare your 2019 tax return, get on my calendar now. We offer free consultations, even if you're not sure. Schedule a consultation, come chat with me, and if we're a good fit, that way we can get this going so you're not past that deadline. All right. And then for those of you that have been waiting so patiently for tax planning season, November 1st, we're in November and December will be tax planning time. All right. We're opening it up just a little bit early since there was no mid-year tax planning there was no time. So be on the lookout for details, pricing, schedules in our newsletters that come out after our October 15th deadline. All right. And then remember, one last reminder that we have PPP consultation, or what do we call them? Personalized PPP strategy sessions available to you guys. Probably don't want this right now because you probably want to wait until we get Congress to pass something. But if you are anxious to get some help and figure out if you're spending your money right, if you're reporting it right, if you're crossing your T's and dotting your I's, schedule one of those PPP strategic calls. It's a 30-minute call where I chat directly with you about your specific question. So no general information. It's you and your business, your loan. That's our cost-effective product that we have available for you guys. And then for those of you that are like, I want nothing to do with this application forgiveness, take it. We have that too. So if that's something that interests you, It's not on the website yet, so shoot me an email and I'll give you the details for that. All right, that's it, you guys. I have a great weekend. Well, have a great Friday and then a great weekend, and I will see you Monday.